Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or what we call the NDX, one of the most liquid index ecosystems in the world, not to mention one of the top performers over the last decade and a half. Joining us this Thursday afternoon, we have Joyce. He is the managing director on Nasdaq's market intelligence desk. For an overview on levels to watch in the Nasdaq-100, we'll take a look at the 10-year. And Brian, of course, we have to take a look at Bitcoin considering the week that it's having. But, you know, let's talk about what's happening in the Nasdaq-100 today, outperforming all the major averages. In fact, all of them, it's up about at least 1.5%. So it's a pretty strong day for stocks.
Yeah, Bitcoin, Nasdaq-100, it's up 1.8% right now. It was down, made lower lows 5 consecutive weeks in a row and pulled back on the weekly charts to, a rising trend line, a clearly defined support line that's been in place since fourth quarter of last year, probably September, October. So natural bounce higher here. I'm not sure if we're out of the woods just yet in this corrective phase that we've been in over the last 5 or 6 weeks or so. But, certainly today we're seeing a pullback in rates. So typically that's, positive for the growth stocks, which would be good for Nasdaq 100.
Yeah, because they were exceptionally strong this afternoon. Even S&P 500, which has a lot of tech weighting in it as well, just a couple basis points behind the Dow, the least performing, but of course still up 1.5 points. So it really has been a strong day for stocks. With that said, and I know you were talking about Bloomberg here, take a look at some fresh levels to watch and how it's correlating to the 10-year.
Absolutely. So right here, we're now looking at the weekly period chart of the Nasdaq 100, and you can see this is the rising trend line that we've been highlighting, over and over again. And so while over the near term, the last 5 weeks, we had 5 straight weeks of lower lows, this week we're up higher, and it's a first significant turnaround, somewhat significant. So what I like to see is looking shorter term is that we've gotten back above that 20-day moving average. So here we're looking at the Bollinger Bands. The upper and lower bands are 2 standard deviation moves compared to the 20-day moving average, which is this middle gray line right here. And we're back above that for the first time since mid-September. So that certainly in and of itself is a positive. But, I still think that we have a level to clear on this index, and that would be, the 50-day moving average. And even though this hasn't been, if we look back a little bit, I'd like to see, I don't want to just use the 50-day because typically that's historically a common or popular support level in uptrends. For Nasdaq 100, you can see that on pullbacks, it hasn't been the support line. So I put less weight into that at this time, but it does coincide with the price gap that we saw during this recent downtrend. And let me just annotate this chart a little bit here. Right there from about 2 or 3 weeks ago, this level at 15,240 or so on the Nasdaq 100, it coincides with the 50-day average, which is 15,158. So up to 15,200, I'd say on the NDX. This is a resistance range that I do want to see the index get back above, and then the prior high, which could potentially be a right shoulder or a topping pattern of the head and shoulders, which is up around 15,350, 15,360. So 15,2 to 15,4, roughly, give or take, is the range that I think is where the Nasdaq needs to prove itself. We're just seeing right now a bounce off of recent lows. Certainly a nice gap higher here today, but if you're a little bit longer term in your outlook, this is a range 15.2 to 15.4 up above that I would like to see the index get it back above. What we have been seeing, so we've seen a little bit of a move higher today in rates, but the curve has been flattening. So this here is the 30-year and 5-year spread, and we could see over the last week or so, especially this week, the curve has come down sharply. That's the 30-year versus the 5. And then here we have a curve of the 10s and 2s, the more popular yield curve that investors look to, and this has also been pulling back as well. And so, that could be potentially a concern. We did have Fed minutes come out earlier this week, and I think what's driving this, so what's driving the pullback in the spreads is the shorter end is rising, not so much the long end falling, but the short end is rising quite sharply. This is the 2-year Treasury yield, and Fed minutes came out, I believe it was yesterday, and the two things I think that we're seeing committee members on the Fed express concerns about, or at least it's in their conversations, is they're worried about the high degree of stimulus that's still ongoing that could create financial, or that could pose a risk to financial stability. And I think the concern there is inflation. We're seeing the Bloomberg Commodity Index having its strongest year in 42 years. It's up 34% year to date. And so I think the Fed is worried about falling behind the curve, waiting too long to raise rates. So I think the market right here with this strong move higher on the short end of the curve is pricing in the risk of the Fed maybe sometime next year needing to, jam on the brakes because inflation just gets too fast, running too high.
Yeah, and I think that's really what's going to be key as we move through earnings season as well, Brian. I mean, we kicked off this week with the banks, and to support the valuations that we're at right now, we're going to have to get some sort of insight from companies and how they are managing inflation and rising costs, and they will be able to offset them enough. So that's something that you and I will be taking a look at over the course of the next few weeks as we get these earnings reports to start coming in here. Let's move on. Let's wrap it up with Bitcoin. It has had quite the week, not even just Bitcoin, but all the other altcoins and some of the DeFi names as well. We're coming into the fourth quarter, and it's seasonally strong for crypto. We saw what happened last December, hitting that key $30,000 mark just after we said Happy New Year on January 1st, 2021.
Yeah, Bitcoin is off to the races once again. This is the summer period where we had the pullback, and it bottomed, as you noted, around the 30,000 level, and now it's been off to the races higher. You can see today and over the last few days, it's stalling right around these highs, which were the all-time highs made in the first quarter, around the upper 50s, low 60,000 level. When we look at the weekly period chart, we could see that a little bit more clearer. Bitcoin's up over 30% this month alone, so it certainly had quite a move. And so we'll wait. Now we wait and see is what can it do when it reaches the 62,000 level, the prior highs. I would suspect that we could see some period of consolidation when we get there, but Bitcoin, as we know, has the potential to blast through expected resistance levels, even if they're longer term, which would typically bring with it an expectation that it's a strong level of resistance. Bitcoin, is a beast, so to speak, and up again 33% this month alone. So, a lot of the cryptos, as you noted, are higher, and could be concerns about all of the money printing that's going on and all the stimulus and the expected stimulus packages still yet to come on the fiscal front. So, this obviously there's always a lot of things that are factor into price action, but I think that's certainly one of them.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.